Good morning, traders. This is Tony D from easyMarkets. We've come up to the long-awaited US CPI. So the markets have stabilized the last couple of days. US stocks have bounced. You can see here grinding higher last couple of days since that Friday low was put in. Looking a lot more constructive, a little bit less fear in the market. This is coming across into the US dollar selling market. You're seeing euro higher, Aussie higher, pound significantly higher. Now, why is pound doing so much better than the others? We had some nice CPI numbers out last night, so it's starting to form a base, looking a little bit more constructive as well to the top side. Still have some damage here from leftover from the EU Brexit commissioner saying that the major disagreement still on the transition plan. But all in all, the biggest story in the backdrop, and if you're looking on, say, a daily, we haven't really broken a downtrend. This is more of a correction than downtrend. And the fact that the central bank is likely to raise rates, given that we had strong inflation, and we all know how important inflation is, the pound is looking a little bit better. The issue with the pound is that a lot of the support for it comes through on the pound yen, and the problem with the pound yen at the moment is that the pound yen has its big focus on how the dollar yen's going. So the dollar yen is making fresh lows. This is the daily. You can see a big level here. If we break that, we've got a significant downside to the 105 level, and seems to be a bit of gravity effect on the dollar yen at the moment. It seems like the market wants to push lower, and the bounces are pretty shallow. But all of this can change. The whole market, like I said, is looking forward to the CPI number tonight. So while we are testing these low levels on the dollar yen, a break does open up 105. The CPI tonight from the US is most important for setting the market's expectations for whether the Fed is going to be raising in March or not. There's still a little bit of room there for the market to firm up that expectation, but also raising rates in March is significantly necessary for them to be raising 4 times this year. So 3 times is the baseline, 4 times the dollar gets stronger. Now dollar yen is reacting a bit negatively at the moment. It hasn't been able to find support, but if we do base, and it does look like there's a double bottom in at 107.50, you can start to look more constructively about us going back towards 110. So it is an important make or break number at an important break or make level here on the dollar yen. Definitely dangerous to be selling this close to support into such a big number, but it's more safe to sort of wait and see exactly how the market unfolds from this point rather than make a huge prediction. Easy to turn bullish if we start to rally though, for sure. In terms of what's the usual reaction to the US CPI, well, doesn't pass the traders' minds that the last 12 CPI numbers, the dollar yen has fallen. So that's in a row every time. So the US CPI has underwhelmed in the last 12 months a lot of the time, and there's a fear that the CPI may come in and give an excuse for the market to sell the US dollar more tonight as well, given the past performance of it. There's been a lot of statistical variations and modifications done by the US Stat Department that does sort of skew seasonally to the US CPI being lower at the moment. So it is a really important number, and it's going to set the tone for the US dollar going forward. If it does come in strong as well, what you have to understand is the big sell-off that we had in the markets began on the Friday. Okay, the Friday before the big crash that we had last week. The selling that started on the Friday, which was, I suppose, the most significant beginning of the sell-off, happened after the NFP showed higher than expected wage growth. So wage growth sparked the volatility, sparked the higher than expected inflation, sparked the US 10-year yields rising sharply, and all the US bond markets yields rising sharply. And if we get a strong number, then that's actually where we start to see the potential return of volatility in the stock market as well. So a strong CPI number will definitely come through in terms of market expectations for the Fed raising rates, and therefore the yields, which are dangerously starting to impact the stock market. If they go up sharply, then you could have the scenario where you do have heavy selling coming through in the stock market again, and that where the US dollar gets stronger. Okay, not just because of the the chance of the Fed raising rates gets higher, but because of the chance of safe haven flows from the stock market selling. Right, so it's really important number because traders have a short memory of this big volatility that happened after the NFP, and this is directly related to inflation tonight with the CPI. So that's what you want to be watching. That's why if you're not in the market just yet, it's probably best just to wait until tomorrow morning to make the view. The market's going to be a little bit clearer as to how much CPI we have. If the CPI number comes in weak, then it's likely the stocks will have a significant rally, and also that US dollar will be significantly weaker, especially if dollar yen starts to lead the market and breaks that key support, and the euro starts to look bullish again, back above say 124 on its way to 125. Alright guys, well tomorrow we'll have a very important update on this. If you have any questions about what we just talked about and any of the topics there, do come through. Some of these topics are a little complicated, especially bond yields and inflation and how they're related, and the stock market to the FX markets. So if you do want to have a chat there, come through on the contact numbers below. If you're not a member of the easyMarkets dealing team and you do want to have access to a dealer like myself, please come through and we can discuss how we can benefit your trading, and what are the different sorts of accounts that we have to sort of give you access to the market in a cheaper, more accessible way. Cheers.